Crypto. All the crypto news in one place.
What's going to happen in January? The prediction markets are at it again, and they believe, when you analyze all the results, they are forecasting a $98,000 Bitcoin in January. Now, that's not very exciting when you consider that's only 4.7% away from where we are right now, but still, we'll take it. 98K is extremely close to 100K, and 100K is that psychological barrier. First of all, we got to turn 93K into support, then get close to 100K, then tap the glass a few times and then break through, and then 100K becomes support after that. We should see if that's going to happen. It all hinges on money flow. That's why we focus on this all the time.
Human greed has no limits, and it's also one of the biggest drivers of market activity. As crypto prices reach key psychological levels, this will grab the attention of the masses, prompting many investors to ape back into crypto. These key levels could be BTC reclaiming 100K, or even hitting new all-time highs of, say, 130,000. Or it could be Ethereum breaking above 5K, or the total crypto market cap climbing back over 4 trillion. And it's worth noting that in recent weeks, market sentiment has turned more positive, so these targets might not be as far-fetched as they seem. Alternatively, retail investors could feel the FOMO if prices have been going up for a sustained period of time. Or they might turn to crypto if other assets like gold or AI stocks start to cool off. In that case, investors would chase higher upside potential, and crypto will likely be one of the first places that they'd look. And believe it or not, retail investors could get swept.
With, the tariffs and the volatility that sort of disrupted the early part of the year. And it's kind of not dissimilar from what happened with the China mining ban in 2021, where we had this sort of interlude in between like the first 60K peak and then a sell-off to 30. And then near the end of the year with the ETF launch, we had the futures ETF launch in 2021, we had us back up to 69K. So that interlude, that introduction of volatility in the traditional markets, I think derailed some of the bullish sentiment that was there. But you absorbed, which I think is the most encouraging thing, you absorbed a lot of the OG supply, which is what those people that were holding coins, you wanted those coins to go into the ETFs, you wanted it to go into long-term holders that are going to be more bullish on the asset. So although we didn't hit the top end price, if you recall, back in 2024, I was on several podcasts, and I think we might have talked about this in the original. I'm a big believer in the cycle being dead. I think the cycle has been dead for a while here, even going back to 2022. So the fact that we didn't hit this ultimate peak in the marketplace, that doesn't mean that we can't be higher this year and higher the year after that. I think the cycle theory is dead, and we can get into that. But the other issue, I do think the treasury companies, that took a lot of the wind out of the sail of money. People were thinking, well, it's a bull market. I'm going to go into these treasury companies.
Meanwhile, you've got MicroStrategy and BitMine just buying Bitcoin and Ethereum like crazy. Strategy bought another 13,000 plus Bitcoin today, $1.25 billion worth. So they don't give a shit what's happening. Okay, Michael Saylor's just buying. And Tom Lee's doing the same thing with Ethereum. I read the other day that BitMine, with their staked Ethereum alone, just their Ethereum that's staked, okay, not to mention if Ethereum goes up in price, just with the amount of Ethereum they have staked, they're going to be making $100 million of passive income per year. That is wild. So obviously, this is still all bullish. So we've got these converging things happening.
This is crazy. This guy sold all of his Bitcoin over here. He's putting it all into physical nickels. And he says over here, yes, you heard that correctly. He has the math. A nickel is worth 5 cents forever, which is legal tender. But the metal side, the copper-nickel ratio between the two is worth 6.2 cents now. So he's buying money, he says, for 20% discount. If copper crashes, you'll still have 5 cents because, of course, that's the legal tender price. If copper moons, well, you'll have a fortune, he says over here. And I don't know, let me know what you guys think about that. But if you go into some of the grok questions that people are asking, is it legal to melt down the coins? No, it's illegal. You cannot melt down the coins. So this guy's probably going to be bag holding a bunch of coins.
Well, they've been burying their head in the sand for 2 decades. So that's the nature of the free markets. That's the nature of capitalism, is the slow adopters are making a bet, whether they like it or not. They're making a bet that Bitcoin and this whole blockchain thing is not as disruptive and is not as permanent as we all think it is. Good luck with your bet. I'm making the opposite bet.
It depends on which corner of that market and industry you go to. This is an interesting story. Monero hits record high after 44% rally just hours after UAE privacy token ban. So listen, we saw the privacy narrative catching a hell of a lot of tailwinds over the past few months, obviously on the backs of Zcash pulling, 10, 12x in 3 or 4 months. But then we started to hear a lot more about even privacy at the corporate and institutional level. I had on Yuval last week from Canton Network, who had the announcement with DTCC and JP Morgan and such. And he made the point that, well, I used to work for Ken Griffin at Citadel. Citadel can't have their orders broadcasted to the world. They need privacy if they're going to do these things on blockchains. So there's a level of privacy there too. But at the personal privacy level, I was scratching my head when Zcash went flying.
We're seeing progress here. Okay, moving ahead. Polygon strikes a $250 million deal for CoinMe and Sequence in stablecoin payments push. Many of you know I hold Polygon Matic. Well, the token is now called POL, P-O-L. It got renamed from Matic to POL. I do hold that in my portfolio, and this is one of the top layer 2s on Ethereum. In fact, if you look at the stats at rwa.xyz, there's a lot of building happening on Polygon. So Polygon Labs has agreed to acquire US-based crypto payments company CoinMe and wallet infrastructure provider Sequence in deals valued at more than $250 million. Fortune reported on Monday. The acquisitions give the Ethereum scaling blockchain access to CoinMe's network of US money transmitter licenses and fiat on and off ramps, alongside Sequence's embedded wallets.
Lastly, we have a massive delta as well. We have X.com literally suspending Twitter. We have 3 years, 2 months, 2 weeks, 2 days after Elon finalized his purchase of Twitter. This was back on, we could see October 27th, 2022, and now 3 years, 2 months, 2 weeks, and 2 days. We have the symbolism of skull and bones, the 1% secret society. We have X suspending Twitter, showing that we have X.com taking over Twitter. The takeover is complete. We do have the latest updates with X money coming in this year, and that is Solana says it will soon be built directly into X, and this comes after we have X announcing live in-app crypto price tracking, which is a huge financial feature coming in. And we can see we have X launch smart cash tags, allowing users to post Solana tokens and view charts and news. So we have X also pushing for mass adoption of cryptocurrencies and crypto trading. Very, very bullish. That's it for the video. Hope you guys enjoyed, and I'll see you guys in the next one. And keep in mind, Elon Musk is also one of the highest members of the 1% as well.
At the end of the episode, we have Senate Ag Committee Chair John Boozman just released the expected schedule for the committee's rescheduled markup, which is now set to be held on Tuesday, January 27th at 3 p.m. Eastern. So the Senate Ag Committee is going to delay till January 27th, the end of the month. The Senate Banking Committee is still on schedule for Thursday to do the markup vote then. Now, we were supposed to get amendments to this draft bill that was released last night at midnight. So they basically only gave the senators 2 days to review this. And we haven't really seen many amendments yet. The talk on the street, the scoop from Eleanor Terrett and others that have a pulse on this and are very well connected, is that there's still a lot of strife, still a lot of debate ongoing.
Really gets crazy from here. So let us know in the comments down below. Here's all the latest. This is Paul Atkins speaking a couple hours ago, if I'm not mistaken. So check this out.
Well, the Congress passed and the president signed a bill late last year that was called the Genius Act. And that was really seminal. It was the first statute that the United States government has adopted to recognize a crypto asset. So that was great, and it helped to bring clarity also to stable coins. And so now comes the next step, a good bipartisan effort by both houses of Congress to bring certainty to the market structure regarding cryptocurrencies. And this fits in with the president's focus on making America the crypto capital of the world. So if you have clear legislation and clear rules, then you have certainty in the marketplace. And so I think we're behind it. We are very bullish on the effects of a bill getting to the president to be signed this year, and I think that'll really be a huge help to the crypto marketplace and for investors in that.
So that's one. He wants it, right? He is for crypto. We know that. We also have a pro-crypto CFTC chairman, new one. We haven't seen him speak lately.
Sessions we've run.
What is your measure of a successful vote? Is it a bipartisan markup? Is it just getting the bill through committee?
I think great.
However, we have to see what happens with the whole Iran and Trump intervening and how that turns out. But take a listen to what Trump says here.
To all Iranian patriots, keep protesting, take over your institutions if possible, and save the name of the killers and the abusers that are abusing you. You're being very badly abused. If the numbers are right now, I hear 5 different sets of numbers. I hear numbers, look, 1 death is too much. But I hear much lower numbers, and then I hear much higher numbers. But I say save their names because they'll pay a very big price. And I've canceled all meetings with the Iranian officials until the senseless killing of protesters stops. And all I say to them is help is on its way. You saw that I put tariffs on anybody doing business with Iran. Just went into effect today.
The Fed wasn't responding. Why weren't they responding? I don't know, but that's an important detail. Third, this whole thing is being politicized by the Fed. The whole thing. You're telling me, let me get this right. On Friday, subpoenas go out. They don't say anything about it on Friday. They don't say anything about it on Saturday. They don't say nothing about it Sunday morning, Sunday early afternoon, Sunday during football. They wait, and in my opinion, they probably leaked the story to the New York Times. And Jerome Powell, he dropped a freaking influencer video online like he's got an OnlyFans account. This dude was locked and loaded with a video. There is nobody at the Federal Reserve who is able to read the New York Times report, write a script, record a video with Jerome Powell, edit it, and publish it within minutes of the New York Times report coming out. So what that tells you is they knew the report was coming and they were prepared. Now, why did they do it Sunday afternoon or Sunday when they did it Sunday afternoon, late afternoon, right before futures opened? Why would they do that? Could they possibly have leaked it and released the video intentionally to manipulate the market lower, to then cause pain in the market because they know Trump cares about the stock market? I don't know. I'm just trying to figure it out like everybody else. But that seems like suspect timing to me. So now if you flip around the other side, horrible.
This is coming off of the inflation numbers. December CPI inflation numbers come at 2.7, in line with expectations of 2.7. Core CPI inflation comes at 2.6, below the expectations of 2.7. Both headline and core CPI inflation were flat in December. Rate cuts are set to be paused in January Fed meeting. We look at the probability. You can see there's no shift from yesterday. Yesterday, we had 96.6% that the Fed wasn't going to reduce. And today, also 96.6% that the Fed is not going to reduce interest rates. So right now, we're in a situation where it seems like that next month, or it's in a few weeks, right? 2 weeks. So January 28th. That the Fed is going to keep interest rates the way that he has had it until now, right?
Even though it suggests that into 2028, and even in the longer run, interest rates are going to be around where they are, things can change quickly once the Fed chair becomes pro-Trump. We'll just have to find out. There's still another 6 months of Fed Chair Powell being here, so we can't count on the interest rate to give us that liquidity to pump markets, at least when we go into the Fed funds, the Fed balance sheets. This is another way that the Fed can boost and stimulate the economy. We know that quantitative easing has begun. We know that the Fed balance sheet for the first time in 4 years is expanding. So the Fed, the Central Bank of America, they have a balance sheet of about $6.5 trillion. And they have the ability to go to commercial banks, buy up a bunch of financial products, giving commercial banks basically money out of thin air, because the central bank, they print that money out of thin air. They don't use the revenue, the tax revenue, etc. They literally press a button, money magically appears. They go to a commercial bank like HSBC or Standard Chartered or Bank of America, whatever it is, right? It will be an American bank. And they buy up financial assets from the commercial bank's balance sheets. Suddenly, the commercial bank has a bunch of cash to loan out. They simultaneously bring down the interest rate. So there's an abundance.
About 1,000 days, switch to gray, plummet. The 2018 top, we had green for about 1,000 days. We changed to gray and then plummet, and then the top our recent top of 2021, that double top, we had once again about 1,000 days worth of green. We switched to gray and then we plummet in price. And we are on the same path for this cycle right here, right before our eyes. Keep in mind, the color spectrum goes from green to gray. It stays gray for, I have written down here, about 180-ish days, right? It stays gray for about 180-ish days, then it flips to red. It's been that way for years and years and years, and these patterns have been repeating for more than 10 years. So here we are with Bitcoin falling below here and this super guppy just flipping to gray. Now let's understand how this super guppy is built. It's built with moving averages, and these moving averages are looking at two different types of mindsets. It's looking at these shorter term EMAs, and then it's looking at these longer term. In other words, it will use data that short term traders like day traders, swing traders will use, and then it uses these moving average that longer term, more investor type traders will use.
Now, when the 1, 2, 3, 4, 5 is pointing down, then that typically means that the ABC is going to be very aggressive to the upside, which is what we saw happen. We saw this massive rally on the ABC because the 1, 2, 3, 4, 5 was such a good setup. And what you saw in the Fibonacci was that the B wave, in this case, only dropped Bitcoin back down to the 0.382. In an S tier or an A tier setup, you would generally expect the B wave to drop down even into the 0.5 to the 0.618. And so when you factor all of that in and you zoom back out to the daily chart, which is what we're looking at, you generally speaking would expect the B wave, if you pull a Fibonacci off of the A wave right here, starting at the top of the A wave, ending at the bottom of the A wave, generally speaking, what you're going to expect to happen is that Bitcoin is going to rally right here into the 0.5 to the 0.618. That means that Bitcoin's short-term target on this B wave is 100,000 to 106,000. And this makes a whole lot of sense because, as we know, Bitcoin confirmed a bear market about 2 months ago. And in the beginning of the last bear market, we saw an A, B, C correction. Now, the reason that this happened was because back at this point in time, Bitcoin was going through a 1, 2, 3, 4, 5. The last bull market was actually a 1, 2, 3, 4, 5 Elliott wave movement. And then you also saw the A, B, C.
Gosh darn it. That's what. Anyway, the one thing not to buy today is apparently the meme coin launched by the mayor of New York City. Look, honey, our money's all gone. The New York City mayor, Eric Adams, launched a meme coin. It went from $0 to $500 million. He pulled all the liquidity out, which is about $3.5 million. Goes into his pocket. Price goes down 80%. Thank you for playing, again, stupid games, winning stupid prizes. Stop buying these damn celebrity meme coins. Be a rational, sane investor, okay? Come on, guys. If you're going to go out and buy a meme coin, you need to find something that's like $1 million market cap, a frog, a dog, penis, something respectable. Going out here and gambling on these celebrity meme coins as the mayor of New York City. You guys and your silly meme coin.
Arena of meme coins. In the first half of 2025, while whales and institutions doubled down on major cryptos like BTC and ETH, retail investors were distracted chasing meme coin gains. The result was that the meme coin sector became flooded with thousands of new tokens every single day, thanks to launch pads like Pump.Fun that let anyone create a token in seconds at almost no cost. Traders scrambled to get in before a pump, then raced to sell for a profit. And it all happened incredibly fast. Case in point, an October 2025 report from Galaxy Digital revealed that the median hold time for meme coins on Solana, where most of the action was just 100 seconds. Not hours, not minutes, seconds. Eventually, fatigue set in. Investors grew tired of the pump and dumps, the bots, the snipers, and the mental strain of watching charts constantly. This was made worse by crypto's largest ever liquidation event on October 10th, which sent risk appetites plummeting. That's because the event exposed flaws in small cap altcoin liquidity and the dangers of leveraged positions. Intriguingly though, meme coin mania might be making a comeback.
So, did you enjoy the that? Let me know in the comments.